Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief Friday edition. We've got a lot going on today, especially with PCE Price Index. That's going to be your key release today. But I have to tell you, it's a nice day on the economic calendar. A lot of folks were real excited about today. Nothing's happened. I mean, I look at U.S. equities, and it's an absolute joke. We're just sort of trading sideways. The U.S. dollar, there's a little bit of action there in the DXY, but to be brutally honest with you, not the best trading day of all time. And as you get some experience in the market, or if you've been in the market for a while, then just sort of immediately your gut feeling, you look at the board, you watch the first hour or two of trade and just go, yeah, these markets aren't going much of anywhere. So I want to welcome everybody back to the Trading Room, no matter where you're watching. We've had a really interesting week. For me, personally, it's been a solid week. Very, very pleased with the way this week's progressed. I think that next week is going to be pretty good. Quick reminder, I'll be out of the office next week. I'm on vacation. I'm going to go ahead and hit the beach for a few days, put the feet up, and maybe recharge my batteries for my favorite time of the year. The fall trading season is the best. There's no question about it. After Labor Day, business will pick up, and we're going to see some real fireworks and a real light show ahead of the U.S. election in November. So that action, right from after Labor Day, beginning next Tuesday, all the way through the Thanksgiving holiday here in the United States, premium trading. I highly recommend, if you're going to trade at any time during the year, you focus on those 2.5 months, those 12 weeks. You can make more money in those 12 weeks than you can sitting around all summer long, even though last summer was pretty doggone good. So good to see everybody back in the room. Mark, thank God it's Friday. Yeah, I hear you there. Running on fumes at this point. Been a long week, but a great week. Bobby Bob, hey, happy to see you too. Welcome to the room. All right, guys, let's start off with a little bit of price action. Then we're going to dive into some of our fundamentals and see if we can unpack what core PCE meant today. My take on it's not exactly as positive as the mainstream media's, but it never is. I'm a trader. I'm a realist, and so are you. If you want to make money in these markets, understand how to read between the lines. Don't get swept up in the hype. You can do it. It just takes a little bit of time and effort. That's all there is to it. All right, guys, U.S. dollar, Japanese yen. I was asked about this one yesterday in the private chat. Right there, your low is January's low. Very important. Yearly lows are hugely important. Definitely keep a close eye on that one. You can see that low down there is right around 141 even. Take a look at this month's low. This month's low is about 141.68. I'm still focused on 141, maybe 141.09s would be an absolutely high probability, fantastic scalp. The real question is do we get them? Now, as far as Fibonacci's go, we don't really need them right now, especially with regards to identifying a key level for early next week. I'm in this dollar yen, but what I do want to point out is the trend. I get asked almost, I would say at least 3 or 4 times a week, if not every day, Shane, I don't know what a trend is. I don't know how to identify a trend. And I say, listen, there's a million ways to identify a trend. One of the best ones that I use is Bollinger Bands. Clearly, if we're trading outside of the upper Bollinger Band, that's a bona fide trend. But Fibonacci's also helped me determine whether something's in a trend or not. We have a fantastic Elliott Wave practitioner here in the room, VJ, very, very sharp when it comes to Elliott Wave. And, the wave basically shows exactly what a directional move, a retracement, a directional move, a retracement, a directional move is. So in this case, going really back to January of 2021, that's when monetary policy for the U.S. dollar, we came out of that COVID lull, the unlimited QE, and now we're looking to beef up interest rates and maybe get into a situation where we're going to restore some value to the dollar. And there's your first directional move. That would be a 1 in an Elliott Wave count. There's a 2, there's your retracement. There's your 3, sort of extended. I would call that a 3, even though you didn't work past this top this top peak. For me, it's a good enough challenge of that high. And then you got to pull back there. All right, so what do you got there? And then boom, there's your 4. So what are we really talking about? 1s, 2, 3, 4, 5. Remember, 1s, 3s, and 5s are directional. 2s and 4s are retracement. At that point, I typically reset my Elliott Waves. I keep it very simple with the wave. I don't trade it necessarily, but I do use it to identify trends. So for me, the biggest level to watch right there is going to be this year's low, and it's going to be right around that 141 area. If, in fact, we take that out in September, we may cut down maybe down to this spike low, which goes back, that market structure's when? It's not an accident, guys. January of 2023, January of 2024, and as we roll later into the year, are we going to be up here higher, or are we going to challenge some of those? I'm ready for a major sell-off beneath this year's lows if it develops, but for me, the bidders are dug in above 141. I'm relatively confident of that. So if you're trading the dollar yen, that's definitely a level that I would be looking at. From a monthly perspective, I got that question yesterday. Shane, are you a long-term investor or a day trader? What do you do? I see you looking at monthly charts. I don't understand. And I'd say, well, A couple of different ways to look at it. For me, long-term levels on short time frames are how I trade. That's how I execute. I identify my macro anchor points daily, weekly, monthly. Those anchor points are hugely important. A number like a yearly low, believe it or not, that's one that you can scalp effectively. You don't need to think of these things as, okay, well, I'm going to buy there and then I'm just going to hold on forever. You don't need to do that. Think about it. If we're dug in at 141 and we want 141 buys, I could buy 141 and a quarter and just look to make 25 pips off a bounce between 141 and a quarter and 141. It's all about your strategy. It's all about how you think about things. To me, I use the long-term levels to identify market state first and foremost. I want to know if something's trending, if I need to have a bias. For me, my bias to the U.S. dollar Japanese yen has been to the upside really for a long time now. And it hasn't really changed, even though we've had a big sell-off. I've just sort of adapted my strategy to get with those shorter time frames to get in on the price action. It's really all there is to it. So if I'm looking to trade right now, this minute, what do I want to do? I want to buy. Why do I want to buy? 4-hour chart. My personal bread and butter when it comes to the Forex, I like the 4-hour chart and I like the daily charts. Those are my favorites just because the Forex doesn't always move very much. So if I go to a 30-minute chart or a 15-minute chart, we're going to run into trouble, at least in my opinion. Now, you're free to do whatever you like. I save those real short time frames on Forex trading for people that are much smarter than me. I like to practice what I know, and I like to cash in with what I know works. And when you've been in the market for a decade or maybe 15 years, you're going to get a little old and crotchety too, and you won't deviate from your own strategy very often. In any case, this is what we're looking at here for this dollar yen pullback zone right there, 145.64. That's absolutely fantastic. I'm watching that closely. I think we could easily get a bid maybe from 67. I would love to get that early next week. I don't think we're going to get it today, but if we do, is that one that you take? Yeah, more than likely you take it. Do you hold it into the weekend? If you have to, yeah, but you definitely have to be aware of what's going on, because if in fact you get caught up in maybe a gap down against your long position here, you could really get hurt. So if you're up a bunch of money and you want to take that risk later today, you can. I don't think we're going to get it. I think we may get this early next week, but definitely watch the weekly open and just sort of adjust your levels accordingly. I'm bullish right now. I want to buy. I want to buy, especially down there from about 141. We're just, you can see just how far off we are. If you remember that W, we actually outlined a dollar yen W earlier this week. I know I talk about the W a lot. If you don't know what the W is, the Bollinger W strategy, go to the trading room, check out the academy, watch the video. 6 minutes, you're in, you're out. I mean, it's a lot shorter than what Oppenheimer, that thing went about 3 hours, didn't it? Or maybe one of the Marvel movies. Those things all go 3 hours. Man, I don't know how you sit there and watch a 3-hour movie. This one's 6 minutes. W strategy, 6 minutes, and it's going to show you exactly how to execute. Boom, boom, boom. There's your entry. Maybe even there's your entry. But this trade has worked. It's worked in a big way. So did we call the bottom of this dollar yen pullback? I don't think we called the bottom of it, but we darn sure got in there with some pretty darn good trade location. I like this one to the upside. More than happy to buy up here just with a limited risk versus reward. This potentially may be a strategy or a trade idea that I put out a little bit later today, although I'm still debating. I'm mulling a few different pairs. Real quickly before we get to the fundamentals of the day, which are important, we need to go over them, and then we're going to look at pretty much anything you guys want to look at. The usual suspects will definitely be in play, but I got asked the question in the private messaging earlier this week, and I forgot about it, and I sort of ignored it, but it's important because I think that I like to show as much of my playbook to you guys as I can. Now, there's some things that I can't show you. My range numbers, which I'm going to go through right now for these products that I trade, I can't talk to you about how I derive them. I signed confidentiality agreements with the 7V Bar Trading Company, and that was my first outfit that I worked for about 2 years back in the day. Now, a lot of folks would say, well, those confidentialities still aren't valid 10 years later, 12 years later. Believe it or not, I still talk to a lot of those traders that I worked with back then, and it's not an area that I want to go into. Now, I'm not saying it's the biggest secret in the world or the most advanced thing in the world, but it is proprietary, and I can't really divulge how I come to these numbers, and I'm not telling you to trade them, and you'll notice I don't use them in trade ideas or trade recommendations or anything, because I want to show you guys how to use what you have at your fingertips to make money. That's why everything you see on your screen, everything you see is public domain. It means it's on your platform, it's free to use, and all you have to do is figure out how to use it. All right. That being said, I'm going to show you what I trade. So the question was, Shane, what do you trade? What do you focus on? I focus on three. Three basic products. The first one is the E-mini S&P 500 futures. I'm in the United States. I don't have CFD market access, so I focus on futures. I trade this using my range numbers out here. That would be your secret sauce. And then I also use my moving averages on different time frames. This is, you can see, we're looking at a 30-minute chart. That's a daily moving average there for us, a potential support zone. But also I use Fibonacci retracements religiously. And like right here, you've got an 8 a.m. spike high there in this market. And what do you have? Well, we had a pretty darn good trade right in here. A nice little scalp right there. But what exactly is developing? Well, you're sort of cutting into what I would call a rotational day. So I'm not in a real big hurry. I didn't sell the 38%, even though it was good for a few ticks. I didn't sell that. I didn't sell 50. Might end up selling this one late day, 56, 26.5, maybe, just because we're in deep rotation. But it would not shock me if we just sort of trade up and settle somewhere up in here. There's nothing going on. My range numbers sort of suggest when price is getting exhausted in a good situation or a good location for me to buy. I definitely will be a buyer down there later today. And then I've also got another range number way down the queue, down around 55.75. So if this does turn into a big sell-off, I'm more than happy to execute these trades later today. And I also probably will sell that 56.25, somewhere in there. 56.25 is a pretty good entry just because this market's slow and rotating. That's the first one I trade, the E-mini S&P 500. WTI crude oil. Anybody that knows me knows I'm a crude oil specialist. This is what I trade. This is this is October WTI CME futures. I don't trade a continuation contract. I trade a monthly contract. There's a lot of reasons for that. We'll have a seminar sometime, and I'll tell you all about it. This was a nice, really from that 7 a.m., 9 a.m. Eastern, 7 a.m. my time, traditional NYMEX open. That's when the volume enters the market for WTI crude. It's important if you're going to trade crude oil futures, to even U.S. oil, you need to be aware at 9 a.m. Eastern. Typically, you see a spike of volume. This is a 5-minute chart. And this goes back to the question I received. Shane, you use monthlies, weeklies. Are you an investor? No, I'm an intraday trader. I'm not even a day trader. I'm a scalper. I look for great levels, and I step up and scalp them. I don't think I've ever placed a pure day trade in my life. I've placed swing trades where I've been in trades for a few days, but a day trade where I make a decision in the first 30 minutes of the session, and then I make a trade and let it run the rest of the day, I don't do that. The reason why I don't do that is because you end up giving back a lot of your profitability. Let's say if price goes in your favor and then comes back and stops you out at break even or something. That's something that doesn't work with my personality. That's just me. WTI crude, though, we had a real nice trade here. Opening 10 minutes of the day, 5 minutes, just a huge 5-minute candle, and then another check at the bottom, and then you came back up, stalled out at 38%. That was a beautiful sell. And since then, we've sort of just been flatlining right around 73.75, and you're off about 3% on the day. Big time trend day for WTI. We'll go over U.S. oil here in a second and give you some levels. And the last one that I like to trade is going to be gold. Gold was beautiful today. It doesn't look like much. All this stuff doesn't look like much, but it's good. There's money there, believe me. My range number, initial range number was fantastic. You'll notice that this orange line was yesterday's low. I'm always aware of where previous sessions highs and lows are, and boom, we go down and we just rotate. Great buy right there from downside support, beautiful bounce, and then we went right up to a 5-minute. You say, Shane, you're still working that 5-minute chart? I said that early in the session with a lot of action. You bet I'm working a 5-minute chart. 30-minute chart, a lot of times we're too late to the party. I love 30 minutes late in the day, but 5 minutes when we're rocking and rolling and trending, absolutely. Came back up, kissed 38%, and really got into some great trades in there. So gold was the winner for me today. Definitely, there wasn't a whole lot on the E-mini S&P 500 or WTI crude, but there was on gold. Those are my 3 products that I focus on. With my approach, I feel confident that I can trade anything. All right, that's what I wanted to start with because that was a good question, and I needed to get into it. Not really just to sort of, just a full disclosure. I wanted to show exactly as much as possible on what I do. I know a lot of folks ask me those questions. I probably got that question about 10 times over the last month. Figured I'd answer it today. It's a good day to answer it. All right, guys, trading competition is almost in the books. We've got, about a week from Wednesday. So you've got about, 10 sessions left to make a move here. You'll notice 5, 3, 2. If you're not yet in, you got 10 sessions left. 10 days. So you probably got, 7 sessions? Something like that. If you want to get in there, we've got almost 5,000 participants. Jump in there and give it a go. Let's see. I got a question right there in the live chat. We're on several platforms now, so if you don't have live chat access in our trading room, check us out on a different platform and feel free to ask your question. OSU Sheriff. Good to see you. Lots of private messages. Fantastic to talk with you. Which time frame are you on gold? For me, gold futures, I'm going to work it. I'm going to go for my monthly, weekly, dailies. I'm going to look for my key levels, and then I'm going to break it down, and I'm going to look gold futures now. I'm looking at that 30-minute chart. That's my intraday anchor. And then I'm going to go down to a 5 and a 1 minute chart when the market dictates. Today, that was a hot market, that hot period. I went to a 5-minute chart and got involved right there and made some real nice trades. So, again, that's sort of a judgment call, but it doesn't take long to realize when you see a hot market and when you don't see a hot market. Today was a pretty hot market right around 8:30 my time, so 10:30 a.m. Eastern. And it was time to go down to that lower time frame so I could get some trades. At the end of the day, guys, we got to trade. We're traders. So that's my time frame there. Spot gold that I'm going to go over today and give you guys a good game plan really on how to trade that later, to open next week. Spot gold's different. Spot gold's going to be 4-hour charts because that spot gold market is hit all day long. The majority of your gold futures is going to start developing during that London, New York overlap, specifically in the early U.S. session. So good question, OSU. Thank you very much. I got the live chat, so you guys ask anything that you want. I'll do my best to answer. Okay, trading competition. Here we go. 532. Join the competition now. If you haven't already, get in there. 5,000, 3,000, 2,000. Self-explanatory. A lot of money, too. Let's go right here. This has just been an absolute show Olive's put on, an absolute show, and up 31,000%, millions and millions of dollars of profit. And you really look at something like this, and you go big drawdown. The trades, though, the trade volume has slowed down a bit, but I'll tell you what, it has absolutely crushed it. Absolutely crushed it the last two sessions and really opened up a monster lead. But there's still about 7 sessions left. Kim McCall in the game, 361, far fewer trades, but still looking to secure one of those top spots. Second place is there. $3,000 isn't a bad partying gift. And then also Mail to Sammy's. This is interesting, fascinating stuff. 13,000 trades, but still the race for third is very, very real. Very, very real. So you guys are going to have an opportunity potentially to get up in this mix. You can see right here, 5,000. Connor Alexander, good to see you. Welcome back. Welcome back to the room. Hope you're enjoying it. A ton of new videos out, lots of new content. So if you have any suggestions or questions, be sure to reach out. Right here, though, pretty good stuff. Not too bad. Pretty good trading. That third place is wide open. So keep fighting if you're in there. Keep fighting. I'm really impressed by a lot of what I've seen. Not so impressed by some of the other stuff I've seen, but pretty impressed, really. All right, guys. Let's see. What do we got here? We got something messed up. This right here is going to be our slides, huh? Looks like our slides are off a little bit. Oh, I get it. Hang on one second. No, that's not it. All right, in any case, we're going to go ahead and skip that then. I'll give you my PCE inflation report then. We'll get right to that. Fed's favorite inflation indicator increased 0.2% in July as expected. What happened here? Well, you had a 0.2% reading, which is pretty darn good, right? Not really. And I'll show you some of the charts I got here in a second that really tell you that that's not necessarily the best thing we've ever seen. Core personal consumption expenditure prices increased 0.2% in July and 2.6% from a year ago. The 12-month figure was down slightly, softer than the 2.7 estimate. Do we think that's good? No, not really. Realistically, inflation's down 0.1% in a whole year, huh? Even that's suspect. Remember, these numbers are highly suspect. They do come from the federal government. And all item inflation came in respectively at 0.2% and 2.5% in line with forecasts. Personal income increased 0.3% slightly than the 0.2%. What does all this mean? It means inflation is coming down, but not really coming down fast enough, and we're also still seeing solid growth in that what I would call in that. It's really hard to mince words here. The bottom line is the Fed is in trouble. They don't know how to bring inflation down. And if you don't know how to bring inflation down, you got a real problem. You got a real problem for a couple of reasons. The biggest one of which is going to be that you cannot raise interest rates after you promise the market that you're not going to. They've already guaranteed rate cuts. If they don't cut now, it's going to be a real problem. The markets are going to crash. So you're sort of balancing, okay, I want to get employment high, but I also want to restore pricing stability. Well, today's numbers were absolutely horrible for inflation. To me, I'm down on it. I think that our inflationary metrics are way too high. I think that unless we raise interest rates and hold them higher, probably for another year, going to be in big trouble later on. Probably early next spring, you'll see that inflation's not going anywhere. It's entrenched. We'll talk more about that when the time comes. Connor Alexander, thanks. I'm diving into the new content this week, and we'll enjoy, Connor. I really hope we put a lot of work into it. Just get in there and see what's going on, see if you can find something that works for you. Right here, gold chart. I was just asked what time frame on gold. This is spot gold. These aren't gold futures. Spot gold trades all day and all night. This is probably based mostly the clearing for this gold contract is going to go through your European theater. Your London's the major player in gold in the world. Futures are in the United States on that CME COMEX. In any case, something like this, we've got really a significant bounce, a significant rejection of our all-time highs. We checked them out right up there on the 27th, and now we're coming off big. So right now, if in fact we wanted to trade intraday, say, Shane, I want to trade intraday. I'm tired. I got to make a trade today. I'd say, well, be patient, number one. If you're not patient with the markets, you'll get cleaned out. That double top right there is pretty much our spike high. And what are you going to do here? Sell, get with the program, join the trend. Don't fight trends. There's no reason to fight trends. This is a downtrend. Now, a couple things you don't have going for you. Number one, you don't have much participation left in the trading week. The odds of us really rotating up from 95, or where are we at right now, 97 up to 06, they're slim. But if we do rotate that high, selling probably 05 75s is a winner, more than likely to the downside. Remember, when they pay us to wait, they don't pay us to trade. Odds are you're not going to get that trade. So what I would do is start game planning for next week, and I already really have done it. Let's go ahead and take a look at the weeklies. Love my weeklies. My weekly charts are incredibly accurate. They give us a great idea what's going on in the market. So this was just a nice big break, stagnation, and then another rotation to the top side. What does that mean for gold? Well, it means that we're near all-time highs. We're sort of pulling back just a little bit. We do have a microwave, not what you make popcorn and cook in, but we have what I would call a microwave. It's not a big wave. It's about a 3-week range. This week's a negative week, the first one we've seen in the last 2, but we're off about 1%. So if I want to look at something like this, do I want to buy? I'm still very bullish gold. I see a major upside for it. A lot of institutional traders are calling for $3,000 an ounce, which in fact, if you do get $3,000 an ounce, that's fantastic. Good for you. I don't know that we're going to get that this year, but what I will say is that I'm bullish. I think that we're at least going to hang around that 2,500 level for an extended period on spot gold. So I'm looking to buy pullbacks. This is a real similar area that I pointed out earlier this week, but 2468, we're right in that ballpark. If we get a negative open next week, remember when we trade beneath like a weekly low or we trade beneath a daily low, we wipe out a lot of retails. What I mean by that is there's a lot of retail traders, folks like you and me, men and women just like you and me that are sitting there going, okay, I'm long. I bought in down here. I'm long. I'm sort of playing an uptrend, a symmetry play. And you're going to have an opportunity potentially to knock out a lot of those guys because they do symmetric stop losses, meaning if you're long from down here and then you move your stop and then you move your stop and you're trying to get in on the trade that makes you a Mercedes or a Bugatti or however much money you're trading. For me, I don't trade that way. I know exactly what I'm going to take before I get in, but a lot of folks are symmetric traders and they have trailing stops and they base them on, say, weekly lows and highly lows. Let me see, getting some messages here. Mighty Jahan, hi, how you doing? I'm unable to join the MT5 account. Can you help me, please? Send me a private message. Visit the HTT trading room. Send me a private message and I will send you the link. No problem at all. I'll send you the link and point you in the right direction and get you up and running for the competition. Thank you for the question. In any case, right here, we would also be looking to buy 24.25. If we do get a chance down there, I would apply a lot of leverage. That's a fantastic trade. But this 38%, we're going to have a pretty good opportunity, I think, early next week to trade that thing and really bid it to the north. So I'm looking forward to that. I think that's going to be a pretty darn good trade in your gold trade. So right here, let's get back to our slides. I think I figured out the problem. Remember, switchmarkets.com, got all your trading needs. A lot of deals over there. Week 35, what's today? PCE price index. That's going to be our fundamental of the day. No donation Friday. Today is a textbook no donation Friday. We had big-time news events. Big-time news events. Well, they don't always drive price action. When they don't drive price action, you've got to be smart about what you do, and that's where the game planning comes in. That's where the psychology comes in. Now, what's a donation? A donation is when you give something away. I make donations. I'm sure you guys make donations. It's important that, we're what do they call that, philanthropy, where you like to help folks that need help or animals or really anything. Any cause you deem great and you give money to, you're donating. I don't donate to the markets, and you shouldn't either. Don't donate to the markets. The markets do not need your money. BlackRock does not need your money. State Street does not need your money. Goldman and Sachs does not need your money. Now, I know I'm preaching and I'm on a soapbox. Get that out of your head. When we take risk, we assign risk to our trades. We don't donate. Every trade I take, I expect to win. Do I win them all? Of course not. No one does. You take losses. But I never go in thinking I'm going to lose, and I never say, I'm just going to throw this out there and see what happens. Stay out of that line of thinking, and especially stay out of that line of thinking on a Friday. Trading's all about momentum. I've said it 1,000 times. Mondays, we get the ball rolling. Tuesday, Wednesday, Thursday, we pile on the leverage and make our money. Friday, what do we do Friday? We put at least 50% of the wins in our pocket. I don't want anybody came into this session up on the week, worked and traded their tail off for an entire trading week and go home negative. I don't want that for anybody, any of you. If you're in this room, I'm real big on this. If I was running a trading firm, and maybe someday I will, if you were a trader for me and you came into Friday with you're up 1,000, up 2,000, up 3,000, and you decided you were going to give it back, you're not going to be trading for me very long. You sat there for 5 days. You were up. Take some of that money home with you. If you want to make more money, then we'll talk about boosting your leverage up from the beginning. But we don't go into Friday saying, okay, I made 1,000. I'm going to take some huge risks today and try to walk off with 5,000. Don't do that. That's not a good idea. Bank at least 50% of your profits. If you're in a losing week, which some of you are, and that's great. It happens. Believe me, it happens. I've had losing weeks, lots of them. You try not to make them a habit. If small, trade as usual. If it's a small losing week, trade your plan. You're not doing too bad. You're not getting killed. You're not doing stupid stuff. Trade your plan. Trade as usual. If it's a big losing week, consider waiting till Monday. If you're getting your tail kicked, if you're losing a lot of money and had a bad week, shut it down. I highly recommend shutting it down. Come back Monday, get some rest, step back, reflect, study your losses over the weekend, settle down. However you do that, whether it's watching some football, going to the pub, going to the beach, going to work out, getting some sleep, whatever you have to do to cool out, do it. And then relax, come back Monday refreshed. You'll find that things are always brighter when you don't take a huge loss on a Friday. You don't make a huge loss, a monster loss. And then if you're neutral, and a lot of you are as well, if you're near scratch, what can you do? Trade as usual. I'm leaving it. It's completely up to you. You can trade as usual. You can reduce your leverage and try to establish some consistency going into Monday, or don't trade at all. It's completely up to you. What I would recommend against is if you're flat, taking huge risks because things are going okay, but they're not really going well and you're still stuck in neutral, I wouldn't take a big risk. Reduced leverage trading can be good because at least if you make some good trades, you make some money, and if you lose, you don't lose very much. And then the last thing is don't trade. If you're not going to trade, don't trade. That's what it means. Run through your analysis, but don't sit there and trade on demo. You're going to make a bunch of money and you're going to be kicking yourself. Don't do it. You don't need to do it. So that's what I would say. Well, that's what a no donation Friday is. Very important to have your psychology in check if you're going to trade professionally for any length of time. What is the PCE price index? This is going to be our fundamental of the day. We're going to burn through it too. PCE price index, known as the deflator, is a United States-wide indicator of the average increase of all domestic personal consumption. What does this mean? It means that it's an inflationary metric. This is what the Fed uses to figure out if, in fact, inflation's coming down or up. That's it. That's what you need to know. And right here is the complete report. What do we have? Well, we've got a situation here where core PCE prices came in as previously, but a little bit beneath what's expected. That's what the markets and the media is really, really going with. You can see that they believe that that's a good sign that inflation's coming down. I don't. I'll show you why in a minute. PCE price index 2.5% beneath 2.6, but the same as last month. Those are yearly figures. How about the monthly numbers? The monthly numbers, you're still rising. And remember, these are growth figures. These are growth figures. It doesn't mean that inflation is 2.6% and it's coming down. It doesn't mean that, inflation's now 0.2% or up from 0.1. That's not what it means. It means it's still growing. And when you're coming off a hyperinflationary cycle and inflation is still growing, you got a problem. Now, the economists are always going to argue with me. They're going to say, Shane, inflation's it's a constant. You're always going to have inflation no matter what. And I'm going to say, yeah, but you're coming off the post-COVID era, unlimited quantitative easing. They flooded the markets with money to try to prop everything up. What does that mean? It means that at some point, you got to take the slack out of the system. That has not been done. That is why inflation still ticks higher. We're at all-time highs. Take a look at the report. This is from the U.S. Bureau of Economic Analysis. I warned everybody about depending on numbers in an election year. The PCE price index increased to 123.38 points in July from 123.19. What do you think the all-time highs are? July of 2024. We're at all-time highs inflation. Here you go. Here's your price index. Now, the price index is designed to always rise. It's always going to rise. That's fine. But we need to see some longer-term plateaus. We had a bit of a plateau, and this is sort of what Jay Powell is saying, hey, we got inflation under control. Well, no, you don't, because you just moved higher, and you moved higher last month, and we moved higher this month. We're not getting anything like this, like we had last year at this time. We're not getting that. We are, boom, major move. We've established a new norm. The inflation's entrenched. It's not coming down. And that's what they won't tell you in the news. They won't tell you any of that. In any case, take a look at what happened during COVID right there. You can see inflation was steadily rising, much, much lower than it is now. But over time, this chart just goes like this, right? Well, there's your pullback during COVID when everything crashed. There was a serious reduction in there was a serious reduction in consumption because everybody was at home. The lockdown shut the economy down. Since that time, the answer to fixing all these problems was to pump the system with money. What do you think happened? Inflation took off like a rocket ship. This chart right here is the reason why the Fed is scared. They won't tell you they're scared. They're scared. Why? Because we got a little bit of a plateau here. Then boom, boom, little bit of a plateau right in here. Now what? You took off again. It's bad news, guys, and it's not stopping. So what does that mean for our assets? Well, something like a U.S. oil, something like gold, it suggests that bullish commodity pricing is going to be the rule. So U.S. oil, I went over this yesterday. It's sort of in depth. I just want to point out again, just because we're selling off today, we're down pretty big on the week. You're looking at about 2%, 1.6%. You got a double bottom down there on the weekly. Your low down there is 71.71. Your low there is 71.49. That area is absolutely huge support zone. I would be looking to step up and bid that. I think that's going to be a pretty darn good area. If we break that weekly double bottom, then we're going to go very, very low. And I think we'll go down in the 60s, and we'll put out a level for you there to potentially trade if, in fact, we see a major sell-off. Remember, our election's huge. A Harris victory is probably going to be bullish for WTI because you're not going to have the production, the cultivation of new crude oil stores. You're also going to have a transition to green energy. That means fossil fuels are going to be at an absolute premium because there's not going to be as many of them around. And lastly, if you see a Trump victory, what are you going to have there? You're probably going to have falling crude oil prices because the idea of drill, baby, drill and get as much oil to market that you possibly can is going to be pretty much the paramount, the key portion of the entire agenda. That's sort of what the Trump administration is depending on to bring down inflation, is cutting energy costs. Now, will it work? Won't it work? Maybe, maybe not. Remember, the other portion of the crude oil dynamic and the natural gas dynamic are pipelines. And a lot of those pipelines, specifically the Keystone pipeline here in the United States, has been mothballed under the Biden administration. If you reopen something like the Keystone or get it going, that means you're going to have an absolute ton more oil in the markets. It's going to drive prices down. How far? 60s probably. They're banking on 50s or 40s. You're not going to get that. You'll get probably 55 or 60. That's my opinion. That's a pretty strong one, but that's okay. All right, guys, let's take a look at a couple other markets here. US 30, a lot of folks trade the US 30. I want to really point this one out because we made new all-time highs. I believe that the US 30 is sort of leading your other indices. And what that means, well, what it means is this, is you're going to see the S&P 500 more than likely make new highs, and the same with the NASDAQ. But right now, sort of got a doji on the week setting up, sort of a real flat week for the Dow Jones or the E-mini Dow, and it's going to give us a decent opportunity maybe to do something like this, to buy a pullback for next week. Potential reversal signal off of those all-time highs. I would love to buy a 38% and a 62%. That's a pretty doggone good trade right there. I'm watching that closely. But as far as where we need to be for next week, I think that the U.S. dollar showing a little bit of strength. I expect it to go back down next week. So if you were looking at something like the Euro USD, this was a weekly level that I pointed out a few days back in the trade ideas, 110.39. What's your low there? 110.43. We were talking about 50 buys, and something like this it's been an interesting trade. You know, we're looking to buy in somewhere up in here. There's your low, about 53. You got a nice bounce sort of right up there to 80. That's a pretty darn good trade. But now we're down and testing this zone, testing this area, and I think we have an opportunity maybe to take a position. I have really no problem taking a position there, really a position long from right here, and just stopping myself out somewhere down in here, probably 110.25-ish, and really look to grab 25 or 30 or 50 pips to the top side. This is the biggest level in the Euro US dollar right there, 110.39. That zone between 110.39 and 110 is absolutely huge. I think it's going to set up as intermediate term support and potentially a bottom in this market. Something to think about there. All right, everybody, I want to thank you for joining me today. Sort of went through a whirlwind. Apologize for the technical difficulties this week. We're transitioning to a new streaming platform, and it's giving me a lot of problems, most likely because I'm not a techie. I'm a trader. I know price action in markets. Thank you, Anna Macco. Enjoy your holiday. Thank you, Anna. I sure will. I'm going to be out next week, and then the following Monday. I think that, it's sort of a tough time to be out. But I wanted to recharge the batteries before we get into prime trading season, and that's going to be from after Labor Day all the way to Thanksgiving. That's what I call just the whirlwind, 10 weeks, 12 weeks of just let's go. Let's absolutely go. So, yeah, I'm going to be on the beach. I'll tell you, I'm going to be on the beach down in Florida. I won't tell you where. But I'm going to put the feet up for a while, enjoy a little bit of R&R, and very much looking forward to it. So, I want to thank everybody for joining us this week. I'm going to be stepping away, like I said, but Connor's going to be stepping in. He's going to be handling everything for next week and probably the next 6 trading days. Very confident in what he can do. So be sure to tune into his live streams and ask him questions if you have them. I know he's going to schedule a few extra live streams as well. Also put out a new video today on the 8-13-21 trading strategy on YouTube. Be sure to check out our How to Trade YouTube channel. I put it in the live chat there, but it could be a pretty good video if, in fact, you're looking for a trading strategy that's easy to execute. All right, guys, ran a little long today, but it was my pleasure. I wanted to get a good, solid stream in before we sort of signed off. World's a crazy place, and the next time I'm in this chair, who knows what else could have happened. Keep an eye on your news cycle. Politics right now is everything. Keep an eye on Russia, Ukraine. Keep an eye on Israel, Hamas. You got to be very careful trading right now. There's a lot of outliers out there that can really send the markets directional. I have a feeling that by the time I come back here and do a live stream, things are going to be very different, very different. All right, everybody, thank you for joining me. Trade the action well, and we'll talk soon. See you.